In 2023, Lucid Motors lost so much money selling cars that on some vehicles, it lost more than the customer paid for the car. Imagine running a business where every sale makes you poorer, every customer makes you weaker, every success brings you closer to collapse. And yet, Lucid kept building, kept selling, kept burning billions, because Lucid Motors wasn't being kept alive by profits. It was being kept alive by a country, and that country was betting its future on Lucid's survival. But while Saudi Arabia was trying to save Lucid, China was building the companies that might destroy it. This is the story of how Lucid became the most financially fragile luxury car company in the world, and why its survival now depends on forces far bigger than itself. Lucid's story begins with a promise, not just to compete with Tesla, but to surpass it. At the center of that promise was a man who knew Tesla better than almost anyone, Peter Rawlinson. He wasn't a salesman, he was an engineer, the former chief engineer of the Tesla Model S, the car that proved electric vehicles could dominate the world. But Rawlinson believed Tesla had made compromises. He believed he could build something better, something perfect. Lucid wouldn't chase volume. Lucid would chase excellence. And when Lucid revealed its first car, the Lucid Air, it shocked the industry. Over 500 miles of range, the longest of any electric vehicle on Earth. Stunning performance, handcrafted luxury, technology years ahead of competitors. Lucid didn't just build a car, it built the best electric car in the world. Wall Street fell in love. In 2021, Lucid went public. Investors poured money into the dream. Its valuation exploded to $90 billion. $90 billion. Lucid was suddenly worth more than Ford, more than companies that built millions of cars per year. Lucid had barely built any. But it didn't matter, because Wall Street wasn't valuing Lucid based on reality. It was valuing Lucid based on fantasy, the fantasy that Lucid would become the next Tesla. But there was one problem. Lucid wasn't Tesla, and it was about to learn why. Designing a great car is hard. Producing thousands is harder. Producing hundreds of thousands is nearly impossible. Factories cost billions. Supply chains take decades to build. Production delays destroy companies. Lucid had built a masterpiece, but it hadn't built a machine. Its Arizona factory was slow, painfully slow. In its early years, Lucid produced only a few thousand cars. Meanwhile, its expenses exploded. Engineering costs, factory costs, employee salaries, supply chain costs. Everything burned cash. By 2024, Lucid generated around $800 million in revenue. That sounded impressive until you saw the losses. Lucid lost billions, not millions, billions. Its cash wasn't draining, it was evaporating, and its stock price reflected that reality. After reaching a $90 billion valuation, Lucid collapsed. Its value fell by more than 90%. Tens of billions of dollars disappeared. Investors who believed Lucid was the future watched their investment become a disaster. Lucid had built the perfect car, but perfection was destroying the company because perfection was too expensive. Most companies would have died. Lucid didn't, because Lucid had something no other startup had: a government lifeline. In 2018, Saudi Arabia made a decision. Through its sovereign wealth fund, it invested over $1 billion into Lucid. It was a rescue mission, but that was just the beginning. Over the next several years, Saudi Arabia kept investing again and again and again. By 2025, Saudi Arabia had invested roughly $8 billion and became Lucid's majority owner. Lucid wasn't just an American company anymore. It was controlled by the sovereign wealth fund of Saudi Arabia. Why? Because Saudi Arabia had a problem. Oil built its wealth, but oil could not guarantee its future. The The world was changing. Electric vehicles threatened the very foundation of Saudi Arabia's economy. So Saudi Arabia made a bold decision. If the future was electric, Saudi Arabia would own part of it. Lucid became that strategy. Saudi Arabia even agreed to buy up to 100,000 Lucid vehicles, guaranteeing billions in revenue. And it built a Lucid factory inside its own borders. Saudi Arabia wasn't just investing in a company, it was buying itself time, buying itself relevance, buying itself a future beyond oil. But even billions of dollars couldn't solve Lucid's biggest problem, China. While Lucid struggled to produce thousands of cars, China was producing millions, and leading that dominance was BYD. BYD didn't try to build the best car. It built the most cars, cheaply, efficiently, at massive scale. BYD controlled everything: batteries, components, supply chains. This allowed BYD to lower costs in ways Lucid never could. And in 2023, BYD did the unthinkable. It surpassed Tesla in global EV sales. The electric revolution was no longer led by Silicon Valley. It was led by China. But BYD wasn't the only threat, because China had something even more dangerous: technology giants entering the car market, like Xiaomi, a company that had never built a car before. And yet, it built one of the most competitive EVs in the world on its first attempt. Because Xiaomi wasn't starting from scratch. It was starting inside China's industrial ecosystem. An ecosystem designed for domination, supported by the government of China. China wasn't building companies, it was building an empire, and Lucid was standing in its path. This was Lucid's real problem, not technology, not design, economics. Lucid's cars were expensive to build, expensive to sell, and impossible to scale quickly. Meanwhile, Chinese companies were getting cheaper every year, faster every year, stronger every year. Lucid was losing billions trying to build tens of thousands of cars. China was making profits building millions. This was not a fair fight. This was an extinction event, because in the auto industry, scale is survival, and Lucid didn't have it. Lucid wasn't a failed company. It was something more dangerous, a dependent company, dependent on Saudi money, dependent on investor patience, dependent on time. Without Saudi Arabia, Lucid might already be dead. Saudi Arabia wasn't just investing, it was sustaining Lucid's existence. Every factory, every vehicle, every paycheck, made possible by billions in external support. Lucid wasn't surviving on its own strength, it was surviving on borrowed strength, and borrowed strength doesn't last forever. Lucid is still alive, still building cars, still innovating, still fighting, but the world around it is changing faster than Lucid can adapt. China is expanding globally. Chinese EVs are entering Europe, entering Asia, entering the Middle East, even entering markets Lucid hoped to dominate. Every year, Lucid burns more cash. Every year, China builds more factories. Every year, the gap grows wider. Lucid is racing against time, and time is not on its side. Lucid Motors built one of the greatest electric cars ever made. But greatness doesn't guarantee survival, because survival isn't determined by engineering. It's determined by economics, and economics is a battlefield Lucid is losing. Saudi Arabia may keep Lucid alive, but it cannot guarantee Lucid will win, because the future of electric vehicles is no longer being decided by startups. It's being decided by nations, and nations have resources companies cannot match. Lucid Motors was supposed to be the future. Instead, it became a symbol of ambition, a symbol of innovation, and possibly a symbol of how even the most brilliant companies can be crushed by forces bigger than themselves. Because right now, Lucid Motors isn't fighting Tesla, it's fighting China, and it's fighting time, and it may be running out of both. If you value stories like this, subscribe, and share your experience with the brand in the comments below.